Hey everyone, welcome to Make Money Count. Today, I don't know where we're going to go with this, but I was reading an article that I thought was very interesting. CRA did a roundtable with a bunch of mortgage brokers. I don't know if the table was round or rectangular, how it was, but it was a bit of a roundtable with a bunch of mortgage brokers who said that the mortgage industry should have access to the information on people's CRA accounts to combat fraud and to help with the mortgage transaction, making it easier for clients to, or for mortgage brokers to process applications for their client.
Well, listen, I think it's a great idea.
Yeah.
Yeah.
I mean, there was a couple stats in here, but they were talking about for every dollar of revenue lost to fraud, it costs $4 for the lender to recoup it. That's what it says. I'm not sure that that's correct, but I mean, I don't know if it's correct or not, but judging from Marcus's face right now, he doesn't believe it.
I'm just trying to understand it. For every dollar that they lose, it costs $4 to get it back.
I mean, well, if you think about all the things that go into rectifying fraud, manpower, this and that, right?
So, does that mean that I honestly that statement confuses me. For every dollar, can you read it to me exactly verbatim?
Absolutely. So we have here, as noted, every dollar lost to fraud takes $4 for the lender to recoup. That is the verbatim quote.
That doesn't make sense to me. I think if they lost with that statement, if they lost the dollar of fraud and they are then recouping the entirety of that dollar, right?
But it costs $4 to get the dollar back.
But they're spending $4 to get the dollar back. They wouldn't do it. If they are spending $4 to build an anti-fraud program and are still losing $1 of fraud, that might make sense to me.
Right.
I just think the sentence doesn't make sense to me. I think that for sure there is a cost associated with building programs to combat fraud.
Or a cost associated to deal with fraud in general.
But you deal with fraud, you got to recoup the capital and you have to hire lawyers.
Right.
That's it.
Right.
So they're saying that the legal bills associated with chasing after who's responsible for returning that capital equate to 400% of the capital that they're looking to
I don't know
recoup.
that that's what they're saying.
Listen, how about this? There's a real easy way to combat fraud. And for sure, it's great that the CRA met with mortgage brokers to come up with a plan. And hopefully that plan just ends up being allowing a client to approve their mortgage broker to verify their income and the amount of tax that they either owe or are able to be receiving from the federal government as a credit.
Right.
So that it can be added to their mortgage application, so that the mortgage application can be efficiently and effectively presented to the lenders that the borrower and the broker decide are best suited for the loan. And you will cut out so much nonsense. Mortgage rates would be cheaper.
Right. Exactly.
Listen, why hasn't this happened already?
I feel like I might know, but tell us.
I mean, I hate to say that the bank's lending programs are quite stringent. And in the event that you introduce this level of income verification, you may see some banks decrease their origination.
Right.
And I think that historically, as long as I've been in this business, it's like this dirty little secret where the banks are like, yeah, we want to know how much they're making, but we don't totally want to know.
Yeah. We only want to know a little bit.
And I don't think that happens as much through the broker channel. I think it happens at the branch level a lot because we can hear about it from customers that we deal with sometimes.
Of course.
But I think that setting a standard for all mortgage originations that the income on the file should be verified by the CRA will introduce an even playing field, will get rid of all the income fraud that's out there, but will likely result in the banks relaxing certain income rules to account for self-employed borrowers.
Right.
I think we'll get back to that. Again, it kind of contravenes part of the B20 for the amount of liquidity required for a bank to hold those not fully income qualifying loans on their book.
Mm-hmm.
But the banks like that the underwriting is a bit of a black box.
Right.
You make money if you have a black box, right? If you have the ability to hide your underwriting criteria, you have the ability to hide how you charge penalties. You have the ability to hide how you incentivize your employees.
Mm-hmm.
Like a lot of what the banks are doing is inside of a black box. They don't want you to know it. So like that's why on this podcast, we try to tell you as much as we can to help you get the information you need in order to work effectively against your bank to get the best product for yourself.
Mm-hmm.
And the same delay that we've seen for this, it's similar. The banks they're not pushing for open banking,
right?
Where every bank would allow a consumer to share their banking information with their other providers,
right?
Because that would allow banks to compete for every financial product you have.
Right.
The banks would much rather prefer not having to constantly compete with each other for all of your products.
Of course.
They know smart, savvy borrowers and investors are going to do this, but they want to minimize it.
Mm-hmm.
And open banking will do the opposite of minimize it. Listen, this is something that, for 15 years, maybe 10, 12 years for sure, we've been building and utilizing our own technology at Cannect, an unbiased technology allowing borrowers to identify what their penalty is, how much they can save by switching, where the best products are available to them, collecting information in real time. A system that allows us to more effectively process mortgages, but allows the consumer full visibility into their file. In doing this, initially, when I was naive, I was part of these panels discussing open banking. We should have open banking. The banks should collaborate. How about this for a reason? And this is 10 years ago, probably I cited this. If Canada doesn't get in front of open banking and allow its fintechs to be nurtured and in an environment where open banking exists, then the fintechs and the brains will just go to other countries that don't have this oligopolistic, well-entrenched banking feudal system, and they'll work there to create the next incredible businesses that consumers in Canada will then end up receiving by virtue of them being rammed down the Canadian government's throat, right?
Right.
Like deregulation is coming. They always say like, look to the United States and we're like 10, 15 years behind.
Right.
So it's going to open up. The banks are so well entrenched right now that they're preventing it from happening. But the reason why this open banking doesn't exist, and it's all we're doing is talking at open banking, is because of the Canadian banks. They do not want open banking. And the reason why the CRA hasn't fully released tax data to mortgage brokers to empower them to have this tool is also because of the banks. So wake up, figure out that the banks are not your friends, understand that they're working against you. And then the sooner you can look at things with that lens, the sooner you won't be surprised at this behavior.
Yeah.
So I think it's great. Mortgage brokers and the CRA got together to figure out how mortgage brokers can have access to the same platform accountants have had access to
forever. Yeah.
Mortgage brokers, actually, there have been tools in the past.
Yeah. They shut them down.
We've used.
Yeah.
that where a mortgage broker uses an accounting license and they partner and they extract the data and you get the tax returns within 24 hours. It was amazing.
Yeah.
And then they get shut down.
Yeah.
You want to know why they got shut down? Because the banks went and complained. Wow, we can't do this. This doesn't make any sense. Anyways, congratulations. One small step for mortgage brokers, one giant leap against the Canadian banks.
I love that. All right.